How many types of business transactions are there in accounting?
There are two types of business transactions in accounting: revenue and capital.
Explain real and nominal accounts with examples.
A real account is an account of assets and liabilities. Example: land account, building account, etc. A nominal account is an account of income and expenses. Example: salary account, wages account, etc.
Which accounting platforms have you worked on? Which one do you prefer the most?
Describe the accounting platforms, QuickBooks, Microsoft Dynamics GP, etc. that you have worked with and which one you liked the most.
What is double entry bookkeeping? What are the rules associated with it?
Double entry bookkeeping is an accounting principle where every debit has a corresponding credit. Thus, the total debit is always equal to the total credit. In this system, when one account is debited then another account gets credited at the same time.
What is working capital?
Working capital is calculated as current assets minus current liabilities, which is used in day-to-day trading.
How do you maintain accounting accuracy?
Maintaining the accuracy of an organization's accounting is an important activity as it can result in a huge loss. There are various tools and resources which can be used to limit the potential for errors that creep in and address quickly if any errors do arise.
What is TDS? Where do you show TDS on a balance sheet?
TDS, tax deducted at source, is a concept aimed at collecting tax at every source of income. In a balance sheet, it is shown in the assets section, right after the head current asset.
What is the difference between accounts payable, AP, and accounts receivable, Arkansas?
Accounts receivable, the amount a company has right to collect because it sold goods or services on credit to a customer. Accounts receivable are assets.
What is the difference between a trial balance and a balance sheet?
A trial balance is the list of all balances in a ledger account and is used to check the arithmetical accuracy in recording and posting. A balance sheet, on the other hand, is a statement which shows the assets, liabilities and equity of a company and is used to ascertain its financial position on a particular date.
Is it possible for a company to show positive cash flows and still be in grave trouble?
Yes, if it shows an unsustainable improvement in working capital and involves lack of revenue going forward in the pipeline.
What are the common errors in accounting?
The common errors in accounting are errors of omission, errors of commission, errors of principal and compensating error.
What is the difference between inactive and dormant accounts?
Inactive accounts are which that are closed and will not be used in the future. Dormant accounts are not currently functional, but may be used in the future.
Are you familiar with the accounting standards? How many accounting standards are there?
There are currently 41 accounting standards, which are usually issued by the Accounting Standards Board, ASB.
Why do you think accounting standards are mandatory?
Accounting standards play an important role in preparing a good and accurate financial report. It ensures reliability and relevance in financial reports.
Have you ever helped your company to save money or use their available financial resources effectively?
Explain if you have proposed an idea which has affected the company's finances positively. Tell how you have optimized the process and how you came to such a decision through historical data reviewing.
If our organization has 3 bank accounts for processing payments, what is the minimum number of ledgers it needs?
3 ledgers for each account for proper accounting and reconciliation processes.
What are some of the ways to estimate bad debts?
Some of the popular ways of estimating bad debts are percentage of outstanding accounts, aging analysis, and percentage of credit sales.
What is a deferred tax liability?
Deferred tax liability signifies that a company may pay more tax in the future due to current transactions.
What is a deferred tax asset and how is the value created?
A deferred tax asset is when the tax amount has been paid or has been carried forward but has still not been recognized in the income statement. The value is created by taking the difference between the book income and the taxable income.
What is the equation for acid test ratio in accounting?
The equation for acid minus test ratio in accounting: acid minus test ratio equals current assets, inventory / current liabilities.
What are the popular accounting applications?
I am familiar with accounting apps like Gram Software, Financial Force, Microsoft Accounting Professional, Microsoft Dynamics AX, and Microsoft Small Business Financials.
Which accounting application you like the most and why?
I find Microsoft Accounting Professional the best as it offers reliable and fast processing of accounting transactions, thereby saving time and increasing proficiency.
Tell me something about GST.
GST is the acronym for Goods and Service Tax, and it is an indirect tax other than the income tax. The seller charges it to the customer on the value of the service or product sold. The seller then deposits the GST to the government.
What is bank reconciliation statement?
A bank reconciliation statement, or BRS, is a form that allows individuals to compare their personal bank account records to that of the bank. BRS is prepared when the passbook balance differs from the cash book balance.
What is tally accounting?
It is an accounting software used by small business and shops to manage routine accounting transactions.
What are fictitious assets?
Fictitious assets are intangible assets, and their benefit is derived over a longer period, for example goodwill, rights, deferred revenue expenditure, miscellaneous expenses, preliminary expenses, an accumulated loss, among others.
Can you explain the basic accounting equation?
Yes, since we know that accounting is all about assets, liabilities and capital. Hence, its equation can be summarized as assets equals liabilities plus owner's equity.
What are the different branches of accounting?
There are 3 branches of accounting: financial accounting, management accounting, cost accounting.
What is the meaning of purchase return in accounting?
As the name suggests, purchase return is a transaction where the buyer of merchandise, inventory or fixed assets returns these defective or unsatisfactory products back to the seller.
What is retail banking?
Retail banking or consumer banking involves a retail client, where individual customers use local branches of larger commercial banks.
What is offset accounting?
Offset accounting is a process of canceling an accounting entry with an equal but opposite entry. It decreases the net amount of another account to create a net balance.
What are trade bills?
These are the bills generated against each transaction. It is a part of documentation procedure for all types of transactions.
What is fair value accounting?
As per fair value accounting, a company has to show the value of all of its assets in terms of price on balance sheet on which that asset can be sold.
What happens to the cash, which is collected from the customers, but not recorded as revenue?
It goes into deferred revenue on the balance sheet as a liability if no revenue has been earned yet.
Why did you choose accounting as your profession?
I was good at numbers and accounting since my school days, but it was during my 10+2. I decided to adopt this field as a profession and did bachelor's and then master's in accounting.
What is a MIS report? Have you prepared any?
Yes, I have prepared MIS reports. It is an acronym for Management Information System, and this report is generated to identify the efficiency of any department of a company.
What is a company's payable cycle?
It is the time required by the company to pay all its account payables.
What is scrap value in accounting?
Scrap value is the residual value of an asset that any asset holds after its estimated lifetime.
Which account is responsible for interest payable?
Current liability account is responsible for interest payable. Conclusion. The bottom line is this: be prepared, do your research, and understand the job you are being interviewed for and how your skills, personality and experience match the job's requirements. Close the interview with questions. Pass on your calling card if you have one, thank them for their time and give a firm handshake before smiling and saying goodbye.